Hello and welcome to our first Greatland Gold Town Hall live Q&A of 2023. Thanks very much to you all for taking the effort to attend this afternoon. We really do appreciate it. Thank you very much. For those who don't already know me, I am Donald Leggett, Head of Investor Relations at London South East, and it's my job to host the next hour and make sure your questions get to Shaun in some kind of a reasonable order. Shaun will speak to slides initially for, say, 15 minutes, and then we'll spend what remains of our hour taking your questions. We already have lots of those. You've got them to us nicely in advance, so thanks to everyone for getting those questions, and do keep sending us more. We'll take them live as well. Just to let you know, London South East will have a stand at this year's delayed Master Investor Show on Saturday, April the 15th. We'll be recording a live version of our Investing Matters podcast with your host, Pete Higgins. It's a really very enjoyable private investor event, so do look out for us there and say hello if you're there. Back to this afternoon and Shaun, we have the latest Scallywag drill results and a feasibility study to talk about as GGP focuses on growth. What else would we be focusing on? As well as untangling Newmont's bid for Newcrest. So the next hour certainly won't be dull. Shaun, welcome back to London from all the investors.
Hi, Donald, and thank you very much for hosting the event and to London South East. And, of course, really appreciate people dialing in.
It's a pleasure as ever, Shaun.
As Donald said, look, I'll try to be quite brief on the presentation so we can really move through the Q&A. Look, I still do love to orientate people around the three pillars of our strategy. It's very clear we want to deliver an expanded Havieron, continue to invest in the drill bit, which is a real focus for us, and be positioned for opportunistic growth. The board itself, I think, again, our shareholders understand that, but I think the quality of the board that we have in place and the management team with that is extraordinary for a company of our size. Just in December, Mark Barnabar formally joined along with Elizabeth Gaines. Mark sits on the Reserve Bank of Australia, the equivalent of the Bank of England, former global head of resources for Macquarie Bank. Elizabeth just stood down as CEO of $70 billion Fortescue and sits on the Fortescue board and just the board of Greatland. And of course, Jimmy Wilson, we had join earlier this year from BHP, widely seen as 2IC, and the operational horsepower at BHP. The board is exceptional. This is the board of a top listed company anywhere in the world. And that's also allowed us to bring in a great team. We restructured our team a little bit. Now everyone's in the Perth office. And with that, we brought in Jeremy Maynard and a business development team from Fortescue in a really friendly way. And that gives us a center of gravity to be able to pursue some of the opportunities that we think are available to us. And we also completed our operational team with Simon Tyrrell out of Northern Star, where I used to be. He's had worked at Telfer before in his career, and he's just a great fit to close out the operational team we needed. Again, I think people understand we have the debt and equity in place. We're really appreciative of the support of this tier one group of banks, HSBC, ANZ, ING, but also our growing institutional shareholder base. It continues to walk up in a really positive way. And of course, our strategic holder, Wiley investments have an incredibly important role to play and add to the potential for us to execute strategy over time. The last half year, and those following the story would know our half year accounts just came out. It has been an exceptional 6 months to reflect upon. Very pleasingly, leading that is the continued record advancement of the decline. I think we've said publicly we're now ahead of schedule. As people probably appreciate, we're always trying to catch that schedule to now be ahead of it and continuously set record monthly production rates or development rates is outstanding. In terms of exploration, it's an increasing focus for us. We really liked our Scallywag intercepts. this week, and there's a slide on that, which I'll briefly talk to later. And we continue to want to find opportunities, particularly around that Paterson region. The debt and the capital stability of the organisation, we are paying 30% of costs every quarter. So having the capacity to do that is essential. And then, of course, the team gives us the highest probability to be successful with the opportunities that come our way. Turning to the asset itself, again, this is the box cut that we started in 2021. We're really 2 years into a 3-year development process. The resource keeps getting bigger. There's a lot of work going on that resource now. I do think that's going to be updated in August, no later than that. But I think we will be aligned with our joint venture partner to do that update in August. Again, I think people have seen this slide before, but it is worth pausing on. It talks to the quality of the asset, 86% conversion of resources into reserve. It speaks to the quality of asset. It speaks to the economics. It basically tells you that with a high-grade deposit sitting next to the infrastructure being that decline, it's all economic. It should all be coming to the mine plan. There's access levels and the like, so you never take 100, but that's the best I've seen in my career. This is a busy slide because we're now looking down in plan on Greatland. I think what I want to say is we've continued to have success in the southeast crescent, but that link zone and eastern breccia, I think, are going to add a lot, be a driving force when we update that resource in August, together with some high-grade pods through that northwest breccia. But I think that just kind of rounds out our understanding of the asset some more. And if you look at the drilling over the last 12 to 18 months, I think you'd have an expectation that there's another good step up in that resource. Again, people have seen this, and I'm kind of looking forward to that being updated sometime soon with the more drilling and more ounces delineated. But ounces per vertical metre on our right of screen is hugely reflective of the opportunity with this asset. In that top part of the ore body where we've got sufficient drilling, we're delineated over 8,000 ounces per vertical metre. Remember, this is a compact ore body, 600 by 650 metres, single decline. Every metre of that decline we push down, every cut is in excess of 4 metres. Every metre you liberate or give yourself access to another 8,000 ounces. So a 4 metre cut would deliver 32,000 ounces. That's incredibly efficient. And that also runs into your all-in sustaining costs. When you have a look where we are, we're probably in that mid-third spiral now. Without trying to get too optically trying to kind of divine kind of when we're going to get to the bottom of the ore body. The guidance was March 24. Remember, it accelerates with time as the ground goes down. We always said it would become a more consolidated material, faster advance rates. So as we go down, we think we're, as I said earlier, running a little bit ahead of schedule, which is tremendous. And saving of time saves cost. And of course, just a reminder of what all this means when we sit on the all-in sustaining cost curve. And if you look to the left of us, it's only assets in the hands of majors. Cadia is, probably has been the best gold mine in Australia for some decades. I'm sure a huge driver of the reason why Newmont wants to consolidate Newcrest into its organisation. You've got the Agnico Regal Fosterville asset, that Swan zonation is kind of running 50 grams. It's an incredibly special part of that ore body. And then you've got Tanami, which is actually owned by Newmont. Again, probably quite similar to Havieron in some ways. It is a bit higher grade, but same mining methodology, sub-level open stope with secondary paste fill to get all of that high-grade material. And overall, we're all in partnership here with a global major with 35 years experience in the Paterson. which goes to their ability and our ability to manage risk for a relatively low risk development. ESG is important. I'd really like to get out another ESG report shortly. It is important to engaging with shareholders and the market. There are institutional shareholders out there that have literally said, getting an ESG rating is part of what is at the final threshold for us to invest. So this just opens up and continues to expand the universe of people who can invest in us. And of course, it reflects our core values. So we think that's really important to get this in place. Exploration, a little bit to talk about here. Of course, we've got in the Paterson, the Havieron area. I've got a separate slide on the success at Scallywag. But when we look at that, the structures run up from Havieron in that northwest onto structure in through Scallywag. There's no better place to look for gold and copper than where it's been found historically. So we continue to really be pleased about the progress we're making there. If I can, just mention more broadly, I think what you see is a very dedicated technical team. I think we have a tremendous technical reputation in the Paterson. Again, Newcrest continues to let us manage the jury joint venture, notwithstanding they have a right to take that over. I think that reflects the relationship, but I think it reflects respect. And we respect their input as well. It's a really close relationship there. So more broadly, I think that as a high quality partner, especially now, I think with the team we have, the more rounded team, the board we have, the financial backing, I think, and we like to think, a sociality of being able to deal with us, a socialness. I think that all really well positions us to take advantage of opportunity in the Paterson, and that's a focus for us. We have a lot we think we can do to consolidate that Paterson area. Look, this is just yesterday's announcement in brief. Look, this is the best results we've had outside of Havieron. We hit mineralization with that 835. This is just the really just going through those Permian layers and slightly into kind of some of the mud transition area to hit 2 grams for 2 meters is a really solid outcome, because what we're really trying to do is test the anomaly, the geophysical feature under that, and to know there's mineralization in that area, I think makes us really excited about what that diamond hole can go through when we are able to mobilize a rig in the next couple of months as we come back into drilling season. Pearl, a little bit different here. We had the diamond rig go down. We think we're now next to the biggest conductor geophysical target we have. That's exciting. We're just sitting on the edge of it. And again, we hit mineralization, 1,300 or plus 1,300 grams silver, plus 0.35 copper, 35% copper. So in terms of maybe potentially explaining that, the conductivity there, again, excited about putting it in. This hole, we actually, as can sometimes be the case, you can't pull up all the core. We had right in where we wanted to understand, some of that core didn't come out. So we're really quite interested in what that does when we go back and revisit that area. The more broader feature, look, a little bit of progress there at Ernest Giles in terms of First Nations. We still like to think we can drill there in the second half of the year. I think I've been beating the drum on that for a little bit of time, but we always thought we might be able to drill it in 2023. We're in the start of 2023, and I still think that's achievable. So that's exciting, and we do want to get boots in the ground, Panorama and Bromus, and understand that. I'm just going to finish the last minute here on the ASX. So I think it's probably June, July. It's actually probably more work doing a cross listing than if we were a private company. So as we're working through all that, but we're active on that to be open with people. June, July, I think is what's achievable. And this is, I think it's expected to be a compliance listing if all states, all things being equal, on the ASX. We think there's ASX mandated locked funds on that ASX who have an interest in resources, who we've met with, who express an interest in investing. There's never guarantees, but we bring that demand onto the London Stock Exchange. Those Australians don't have shares, so they're not coming onto the London market to sell them, they're coming on to buy. So we think bringing on extra demand is really beneficial. We'll work out how to optimize that. But the liquidity will be here in London. We'll probably have a scheme of arrangement here for shareholders to approve that. We're working through the details because right now, so I might digress a bit again, right now, everything we do in Australia, we get Australian legal advice, then we get UK legal advice. So it costs us twice as much, twice the time. Sometimes those advice are not the same, so then we need to get them in a room and it takes us 3 times the cost and time. We'll likely try to put an Australian vehicle top hat on top of the Havieron entity, so we don't have to go through UK legal advice. We do it within the Australian jurisdiction. And I think that really reduces our cost and also speeds up our cycle time to be able to do things. So London still remains the primary liquidity and where our shares trade, but I think having that simplicity of structure will help. And again, we'll explain this more, but I'll explain it more tonight for those coming to the town hall meeting. But I think that's going to really help simplify the company, reduce costs, and make better use of the platforms we have. This last slide really just revisits what I said. We think we get to bring in capital markets, increase our profile there in Australia, and that generates demand here on our deep listing, which has good liquidity here in London. So with that, I'm going to pass back to Donald and open the floor for questions, but hopefully that was a useful overview.
Okay, yes, that was a very useful overview, Shaun. Thank you very much indeed. Interestingly enough, my first 2 sets of questions are 1 around Scallywag and 2 around the ASX cross-listing. So either I've got something very wrong or something very right. Scallywag, there's hardly any drilling been done there, to be honest. So how encouraged are you by these initial results, and what are you hoping for in the future?
Well, look, at the core here, these are the best results we've had. We've hit mineralization sitting next to anomalies we wanted to test because we're hoping they would be mineralized. There's still a lot more to unpack before we are definitive about what's there, but they certainly warrant following up. I think I've explained in the past that we are very technically driven around exploration. We don't go in and pattern drill and spend $10 million punching in 10 holes to understand what might be there. We drill in a hole. We have an expectation of what that will be. We understand the stratigraphy. We might run some more geophysics. We recalibrate against what we found to what we thought we'd find, and we retarget where we want to be. So then there's a follow-up hole. These certainly warrant follow-up holes. And so, we conserve cash. Now, we can accelerate things. We have the resources to be able to do that. But fundamentally, the funds we have are dedicated to development of Havieron and to get that into free cash flow. But if we do feel we've hit something and delineated that, had 5 result, and remember that was the 5th hole. It wasn't discovered on the first hole. I think you'd see a convoy of rigs going down into the Paterson to drill out at high speed. But I think for now it's very technically driven, and I think we should be proud of that. We are careful and we spend that exploration allocation extremely well to optimize the number of targets we can test, but also to give us the best opportunity and time to create that option value through exploration success.
Okay. I was going to ask you about the ASX listing, but to be honest, I think you've signed it off very nicely. So let's just say that Nick Greenwood and Tony Bunyan were the 2 people who were going to ask you about the ASX listing. But June, July, and you're working hard at it. It seems to be the answer to that one, and a very positive one. Let's go to Simon Bergera. he asks a very broad brush future potential output of Havieron question. I recently enjoyed listening to your Bell Potter interview, he says, and would like to ask you for your thoughts around the statement regarding the potential for Havieron to be producing 400 to 450k ounces per annum. So that's a thought for you, Shaun.
Yeah, I think if you were in a mining area where you're only taking out Southeast Crescent, which runs that 3.7 to 4 grams gold equivalent, and you can achieve that 3 million ton run rate, you're turning out around 400,000 ounces gold equivalent per annum. Now, I think that's a zonation we're obviously going to target. I think we need to have the detailed mine plan to have that. We have the working one in place. What that tells you is we're also going to be, especially on the south side of the dolerite, we're going to be actually taking out some of that northern breccia as well. If you've already developed the levels, you're putting your mining polygon together, and you can bring in some incremental ore, even if it's only 2 grams, you're probably going to take that as well. So look, I think where you end up coming out as an average mining rate between 350, 400, even 450,000 ounces per annum will really depend on that detailed mine plan. But when you start with a 3.7 to 4 gram ore body at a 3 million ton rate, that's where you can kind of center at a midpoint around that 400,000 ounces gold equivalent. But then I think I really do want to defer to that final mine plan as to how we optimize. Do we have periods where we're really just exclusively focused on that Southeast Crescent or even high grade sections of it? Or do we have just this blended average where we maintain taking out some Northeast Crescent? But it's a big mine. A 400,000 ounce mine is certainly top 10 inside Australia. So it's exciting, it's good scale, and I think there's optimization work to be done.
And it hits that famous tier 1, the symbolic tier 1 mine that you've been hoping for?
Well, I think we consider it tier 1. I use the terminology world class because I know Newcrest has its own internally developed kind of definition of the world. So we try not to be, we try to use something sympathetic to our joint venture partner. But this is a great asset.
This is a great asset. I like that very much. Okay, MRE, DTM and DFS, feasibility study, date of mine, and the MRE. I pulled this one out because I thought it was interesting. Mark Hennessy. Hi, Shaun. Excellent news on the progress achieved on the decline so far. In the absence of guidance on a date for the feasibility study, date of mine, could you talk us through how momentum will be sustained working towards production? Of course, particular interest is acquiring the necessary regulatory approvals in a timely manner to maintain continuity and achieve first ore as early as possible. So he's basically asking you to summarize the progress overall.
Yeah, so look, a little bit to unpack there. So let's start with EPA approval. So, well, you can see physically on screen, if you're seeing what I'm looking at, the box cut there going down in the decline, there's EPA approval to develop Havieron in place. Obviously, next door at Telfer, that's been operating for 35 years, EPA approval in place. There is a process to just confirm with the EPA, all being taken over ground and linking the two mines together. I think there'll be an update with the EPA pretty shortly on that, and we're looking forward to sharing that with our shareholders. So we feel this is a established mining province. Just to give a credit to the joint venture partner, I think Newcrest does a tremendous job at engaging with the local Mar2 people. I'd like to think Greatland does a good job of that as well. But I think Newcrest has been leading that EPA process and making sure that they had the support of the traditional owners. So I think that's a great credit to them, and I think it de-risks those processes. And then in terms of overall schedule, look, the mine just continues to be developed. it would be nice to have that definitive feasibility study in place. But again, as everyone appreciates, the DFS is nice to have. It should be in place, to my mind. But Newcrest is funding this. We're funded. You don't technically really need it, and it doesn't have an impact on the boots in the ground. Burncut is still there, taking cuts, and will continue to take cuts. So it continues. I think Newcrest had told the market, and we had reiterated that they were planning for the December quarter 2022. Disappointing for whatever confluence of reasons. They didn't think they could achieve that. They had the same problem with their Red Chris asset as well, where they weren't able to complete the DFS in the time that they communicated to the market. That's not to pick on Newcrest. I think they're obviously a really substantial organisation. It's only to put it in context that this was multifactorial, multi-asset for Newcrest, the challenges of timetable. So ultimately, I think they then came out and said something that they were targeting 30 June. As I'm sure you're all aware, they're currently, probably pretty distracted with a takeover bid right now. I'd like to think that they'll hold to that, but having said that, I equally think I'd understand that they're probably not going to come out with a DFS until the takeover has been resolved one way or the other. There is an argument that they might have rushed them out to articulate value to the market, but that hasn't been the case with Red Chris or Havieron to date. And I think my own observations is they're working through the optimization, and I think they've been quite clear to the market that these things take time. They shouldn't be rushed. They should be done comprehensively, and they're more about focused on the quality of their internal processes, rather than trying to rush to external market guidelines. And if that's their approach, I understand it and respect it.
Okay, which it flows nicely to a question from Dipsard. So he says all that initial stuff that you've just dealt with, and then he says, should we be concerned about the production schedule and green lighting of Havieron now that Newcrest are in the middle of a potential acquisition by Newmont? In other words, does that put the process under threat? Will it actually happen because Newcrest are distracted?
Yeah, look, thanks for the question, Dipsard. I think the boots on the ground probably don't get too caught up with what's happening in the corporate Melbourne office, so we don't really observe a change on the ground. And that's across, I would have thought, their whole portfolio of assets, and I've been involved in takeovers as an executive team before, and I don't think it does have a huge impact on the operational team. Sure, in the head office, there's a lot of activity being generated, but in terms of out here at site, I think it's a relatively business as usual approach. The pathway for us is clear. It's deliver completion of that decline, and start getting the development underway for first ore in 2024. So I think everyone has a very clear goal, a very clearly delineated goal at site. We're making record progress achieving it. So I don't think it changes the long term. I did mention the DFS. I think it can probably have an impact on that timetable, because that is ultimately a function of the corporate team's productivity.
And what about MRE? If that's a subsection of the DFS, when might you expect that? And I'm certainly, someone has definitely asked, apologies, I can't remember your name, but someone has definitely asked, might it be possible to simply go rogue and do what you did last time and publish an MRE if it's in our favour?
I'm not sure I'm going to agree with the characterisation of going rogue, but
sorry,
advocated for the value of Havieron and for the value of Greatland shareholders. We've done it before, and we're certainly willing to do that again. So I think in this case, I think there are, again, it's multifactorial. We were kind of gearing up for March. We were actually gearing up for a March release. We actually think there are some genuine technical reasons why some additional time and consultants' insights on that, bringing that bigger, expanded Eastern breccia actually does make a lot of sense. Our technical team kind of thinks it's also sensible to take that course. So I think, again, the technical teams at Newcrest and Greatland, I think both had a very similar view. We don't think delaying the Newcrest, the delay by Newcrest from in historic years in February to an August update of resources, which they've done universally. Because our concern last time is they updated the universe of Newcrest resources other than Havieron, and we went alone, as you characterised. In this case, they're simply aligning Havieron with every other asset in their portfolio. So we respect that process. We do think there's value in alignment. We think technically there's a rationale for that. But I think the underlying question there, what would happen if it got delayed? Well, we are working to that date. I think right now we will say we will hit that date. We think shareholders have been patient. We think there's a good resource update coming. We want to share that with the market. So I think we're happy to align with Newcrest. I think there's a broader strategic reason why that makes sense in this kind of takeover scenario where there are a range of opportunities that may occur for us as Greatland. But I don't think we would, past that date, be comfortable with no update to the resource. So hopefully that gives people confidence that it's coming, but also an understanding as to why I think it's in our interest, both technically and commercially, to let it run its course. And we do like being aligned with Newcrest. They're our JV partner. The relationship's important and strong.
Okay, let's just walk through some quick dates. Decision to mine from Lynn Trulock. Please, can you tell us when you'll make take the decision to mine?
I think the decision mine needs to be done within 30 days of the definitive feasibility study. It technically doesn't need the definitive feasibility study. I think from a Greatland point of view, we would require it. We think having that study is important to have to hand. But the parties can contract to do something else. So it's really, that is 100% linked presently to that DFS timetable. And as I've said, I think with the takeover, my sense is that becomes post-takeover activity rather than mid-takeover activity.
And Simon Berger asks about first ore. He listened to Bell Potter and was enthused about the Bell Potter interview that you did. And he thinks you might have been alluding to an early Christmas present for late 2023. Are you going to give him an early Christmas present, Shaun?
Well, I think that's kind of around the time that we shifted the narrative to saying we're ahead of schedule on the development of the decline. I think that means getting to the top of the ore body, which is presently scheduled for March 24. Hopefully we can deliver that early, and Christmas presents are good. Having said that, nothing in mining is linear. We haven't changed that official date. If we outperform it, I think we should celebrate it at that time. First ore would not be at the top of the ore body. Top of the ore body, then develop some, you might get some development ore as you put some drifts in, but then to come in and stope would be the third step in that process. Get the decline below the ore body, set some drifts in, then come and stope. So there's a sequence, and I think that sequence plays itself out in 2024.
Okay. First, Phil Curtis, he's very optimistic. He wants to know about the first gold pour and the first dividend payment from GGP. So taking a very long time horizon, I suspect, but here we go. First gold pour and first dividend payment.
Yeah, okay. Thanks, Phil. Look, I'm going to just have to refer to the PFS there, because that's the information in the market. I think, again, just aligned with what we said before, top of ore body ended up being recalibrated to March 2024. So stoping and first ore, and presumably put that through the mill for first gold pour in 2024 as well. And look, I think dividend, I'm a dividend kind of guy. We bought a dividend process in at at Northern Star. We had a very high 60% net profit after tax dividend payout at Sakari. I think, again, dividends are a sign of maturity. I think they broaden your appeal to investors. So, as I said, I'm always really sympathetic for them. But first, what we'd want to do is make sure that we completed all our CapEx, that we had the working capital in place to continue to optimize Havieron. And then the third step would be to introduce a dividend. So I think that is scheduled certainly well after 2024, but it's going to be on my mind. I think it's a great idea.
Very good answer. Barry Calvert asks, will production be delayed due to the long delay with the DFS?
Barry, well, look, it's a good... it's an interesting perspective here that you don't actually need a study to extract ore. So I think prima facie, my answer is no. You could actually have a really unusual scenario here, particularly with the Newmont distraction at the Newcrest end, where you're stoping ore before the feasibility study comes out. Maybe not. But it doesn't actually slow you down. Why do companies normally do feasibility studies? Well, normally you need them for the funding. Normally you need them before you start the decline. Now, in this case, such was the conviction of Greatland, but presumably of Newcrest as well, that they started ahead of study. In fact, we actually started this decline and spent hundreds of millions of dollars before the PFS was even complete. So I think in this case, it doesn't slow you down, but it's a nice to have, and certainly I would like to have it in place.
Okay. Now, everyone has been very patient, and they've listened for a very long time. And it really is time that we talked about the consequences of Newmont attempting to, bidding for Newcrest. Chris Thompson asks an excellent opening question. What's the latest on the Newmont bid, and how may it affect GGP? Which is a great first question, I think.
And so, look, I'm super interested in it. I think we're all should take a deep interest in it. I think it creates opportunities for Greatland. So, as I understand, which is public information, Newmont approached Newcrest. They put an offer to them. That offer was rejected. Newcrest put a second offer to them for a confluence of reasons that became public. Newcrest and then subsequently Newmont announced it. Some weeks later, Newcrest came out and announced that they had not accepted that higher offer. However, that they were willing to grant Newmont access to due diligence to consider its bid further. And I think that the inference the market took from that is if they could bump up the price a little bit higher, Newcrest would be receptive to it. So that's underway. To my mind, that due diligence may not have started yet. I believe Newcrest is really focused on a non-disclosure agreement being in place. They can be very simple. They can be extraordinarily complex depending on the approach that Newcrest has taken. But I would imagine they would want, having told the market they want Newmont to undertake that due diligence, they would ultimately show some flexibility to ensure that took place. To my knowledge, that due diligence hasn't started taking place. It may, but I have not seen any announcement demonstrating it has got underway. So I think there is a little bit of delay on that draft non-disclosure agreement. But you'd expect that to take days or weeks. It's probably already been weeks, but you wouldn't normally associate that with a huge amount of time. It should be a relatively short process. I think I understand that Newmont did due diligence on Newcrest a few years ago when they were looking at when they did the Gold Corp transaction. I can't confirm that's what I'm told. So this would somewhat be an update for them. So I think that all plays out probably in the month of April. Now that's me trying to divine an outcome. We don't really know, but I think that would be what I can share with you is I think what the market tells me that they think will happen, and fund managers and investment banks I think believe that that the two parties will come to an agreement or not in April. I think and that will be really interesting for us. And then the opportunities that come out of that. And one of the things that Tom Palmer, who is the CEO of Newmont, has said is that they're not trying to make their business more complex. They would then consider their portfolio and try to optimize it such that they have a smaller number of bigger assets. Now, I think Havieron is an unbelievably good asset. I think it sits in the portfolio as a major and effectively presently does. Having said that, the scale is not the size of some of the other assets. So to compare it to Cadia is 32 million tonnes per annum, about, in my mind, whilst we're doing 3 million tonnes per annum, 70% is attributable to Newcrest or Newmont in time. So that's 2.1 million tonnes per annum. It is a different scale. So if a mining company wanted to focus on its larger assets, perhaps that creates an opportunity for us. I think some of the steps we've taken over particularly the last 6 months, to have the debt in place, which is scalable, to have the equity support and the institutional support in place is really important. To have a cornerstone shareholder, particularly the nature of Wiley, which has a track history of supporting sensible acquisitions, I think is a huge opportunity for us. The credibility of the board we have, the credibility of the management team we have to be seen as a preferred counterparty, and a counterparty with the financial resources to complete, I think all put us in a really good position to take advantage of whatever opportunities come. I think in addition to that, just remind people we have a really strong last right of refusal. We would absolutely pursue those rights under a scenario. But our base case is really good too. We own 30% of a world-class asset that will develop a stream of cash flows that we can leverage. But it's a really exciting time for us. And I think the optionality or the option value in our stock right now around those events is really significant. So I think it's certainly really interesting for people. Our shareholders should be super interested in it. I can't tell the future. Newcrest may perhaps survives. Perhaps the person from Newmont doing due diligence falls in love with the asset, and they're in that dilemma of, do we keep 70% of our smallest asset, or perhaps they want to take us over? And again, that's not necessarily what I want to do, but being taken over at a meaningful premium, recognising the full value of Havieron, but not the risk of its development. And we've got a partner in Wiley, which again is incredibly well placed to help us extract full value from a bid. So I think it's really exciting. I think there's multiple ways it can evolve. But I think 12 months ago, I think it would be very difficult to say that credibly Greatland would be a counterparty. Or 2 years ago, I think it would be very difficult to say Greatland is an expected counterparty on a transaction involving a high value transaction on 70% of Havieron. Today, I think the market expectation is we're incredibly well placed to be able to be constructive in such a program, and I think we should celebrate that. I can't tell you whether it will happen. I can't tell you what the future will hold, but I can tell you that we're interested. We're interested who our joint venture partner is. I think we'd have a great relationship with Newmont. We enjoy a really good relationship with Newcrest now, but Newmont we'd be delighted. I've dealt with them in the past and have a good existing relationship with them. They're not new to me. I've bought assets off them before as well. So, I feel good about it. I feel good about all the work we've done, all the preparation we've done puts us in a good position to take advantage, whatever that future may hold. But the options in our future are different and perhaps better options than were there 2 years ago.
So we've got several questions around the possibility of purchasing Telfer, but you seem to be saying to me you're not just thinking about purchasing Telfer, you're thinking about purchasing Telfer plus the whole of Havieron, and you think that's a possibility.
Well, look, again, I can't tell the future, but I think what I was trying to broadly say is that I think Telfer and Havieron are really two sides of the same coin. I think there's ways you could look at them individually as well. But I think in the market's mind, Newcrest and ourselves have done a really good job over a 2, 3, 4 year period of describing to the market that as mining activity comes to an eventual end at Telfer, that Havieron is a ready-made alternative and new feedstock ore source, just 45 kilometres down the road. So I think that narrative is in the market. If a group was to keep Telfer and separate it from Havieron, I think you can solve the puzzle at Havieron because you have a multi-decade mine life. Infrastructure is created for 4 or 5 year mine lives in Australia to develop gold mines. So of course you can solve the puzzle with a 30-year mine life, but that would also crystallise a rehab liability for the holder of Telfer. Perhaps they wouldn't want to do that. Perhaps they would rather bundle it up and sell a complete package, mine and processing solution, and that might make more sense in the market, both for an acquirer, be it us or anyone else, but also for a vendor, be it Newcrest or Newmont or, again, anyone else.
Okay. Now, I think the next question to go to is by that, Dipsard, you've done well, I have to say, because you've raised the Wiley question, which is where we go next, I think. Our cornerstone investor, Wiley, were more than an investment company. They explore and develop their own assets with a long-term metal strategy in mind. And if Newmont acquire Newcrest, might they factor in an opportunity for Greatland to acquire sole ownership of Telfer and Havieron? In other words, will Wiley, let's just talk Wiley, do you think they will be excited about this as an opportunity as much as you are?
Well, no one's as excited as I am. But
okay, Shaun, we'll give you that. But Andrew Wiley, he's almost as excited as you.
So yeah, look, I think there's some comments that people have asked about where Wiley have talked about they like having Havieron in the portfolio. They think it's a high quality asset. I think the underlying question there that they talked about the sophistication and the capability of Wiley, both technically and financial. They are really have a really good reputation in the market as an investor and have capability, and they do own assets for themselves. So I think there's two elements to it. I think one, I think they are well placed to understand the opportunity. But two, they're on our side. They're on our side of the fence. I think that is great for us. I think my own view is they play that opportunity through Greatland. But if the inference was there, well, maybe Wiley becomes our JV partner and we buy Havieron and they buy Telfer. Well, it would be a really close relationship. So I don't think there's any bad outcomes there. But we work, I work, I'm a shareholder in Greatland, so are the people on the call. We unapologetically would like to keep this in our house. We have a brilliant relationship with Wiley. I just think the way to think about that is they're on our side. We'd work together constructively. But if the best outcome is Greatland owning it, the second best outcome is us owning it with Wiley. But I think that's unlikely. I think they're there just to support us. But I think there's no bad outcomes in that scenario.
Great. Gosh, this is a a pretty extraordinary conversation we're having, I have to say. This is all very exciting. Perhaps I'm the third most excited person. Dave Halliwell asks, he's talking about the data room, all the information that's in this Newcrest data room. And he's saying, well, might we just release that information independently? And would that be a good thing or a bad thing for the GGP share price? Which is quite a sort of an interesting question.
Well, look, we're not privy to the discussions between Newmont and Newcrest, and we don't have a favourite in that. We like both counterparties, and they're two really sophisticated groups. In terms of information, so we don't have an option to release that. There's non-disclosure agreements in the JVA where Newcrest wouldn't do that unilaterally. But from a Greatland perspective, we think the more information in the market on Havieron, the better. If we were in a scenario where we own this 100%, I think there'd be a great deal more information in the market, because we would be sharing everything kind of almost in real time. Now, Newcrest has a different materiality threshold, a different tempo to their organisation. That's not to say it's not a good tempo, but it's different. And I think some of the outcomes that they can drive are really good from that, because they're thorough and methodical, and these are good things that we should respect and celebrate in our joint venture partner. But I think, I don't think you're going to see a public data room on Newcrest in whole or in part become a public document.
And it simply wouldn't be allowed for you guys to release information.
Well, just to be clear, we're not a party to those discussions. We won't know necessarily what Newmont views with Newcrest, what they share on any of their assets. That there's a private conversation there, and much the same if we had a conversation with another party, we wouldn't be inviting Newcrest to sit in the room with us. And I'm not expecting an invite from Newcrest, and notwithstanding an incredibly respectful and good relationship, that's just not how you'd expect them to want to.
Understood. It's not your place. That's fine.
Well said, Donald.
Yeah. Okay. David Woodward says it was mooted months ago that Canadian miners were looking to boost their long-term reserves, as well as pressing for the largest miner status in the world. Newmont particularly. Do you think Newmont are planning to mothball Havieron along with taking out Newcrest for shorter term gains elsewhere in the Newcrest portfolio, should they be successful with their takeover attempt?
So look, a few things there. Newmont's actually USA rather than Canadian, but let's just lump this in as North America.
Let's call them North American.
Yeah. Both are good places. I think there's clearly Newmont sees value, but as I mentioned before, Tom Palmer's public comments. I haven't spoken to Tom Palmer, but they've talked about rationalisation of their portfolio, that they're not trying to add complexity. They're trying to have a smaller number of higher quality assets. I think it's a pretty formidable combination. I can see the attraction in it without wanting one outcome or the other. We really respect that. But yeah, absolutely. Look, Havieron's a world-class asset. I think the question partly there was, would they want to keep it? They don't want to keep everything, but there's no reason they wouldn't want to keep Havieron. There is no certainty to outcomes here. What there is optionality. I think there's really interesting optionalities, and I think I said earlier in the call, they could turn around and due diligence, fall in love with this thing, say we rate this in the top half of our portfolio, or the top quarter, or the top 3/4 of the portfolio, and turn around and say, right, how do we get more of it? Again, I think we have a level of protection there in terms of getting a good outcome, but to be clear with people, that's not my ideal scenario. But if we're rewarded,
how much might you hope to get for it? Let me be rude and interject. I'm sure the audience are all going, ask that, ask it. How much? How much would you ask for Havieron as a going concern?
Yeah, look, I really
Your 30%.
appreciate the question, Donald. And look, that would be the outcome of a negotiation, but we think what the share register does, the support we have with the retail market, the introduction of institution, and of course, Wiley again, I think it positions us incredibly well to be confident in a defence where we can extract what we consider full value. And I think Wiley would come to that own conclusion there around full value and would be uncomfortable if we didn't see at least what they were seeing. So I think there's some checks and balances there. I don't think we're low-hanging fruit for anyone in a takeover scenario, and that's good. I think if people have an expectation they have to pay fully for us, they come to the table with a full price, and that's certainly better than an opportunistic bid.
Now we're coming to the end of our hour-long session here, and we're entirely not trying to dodge this. I'm going to ask you about the share price. So we've got a few share price questions here, and the most obvious opener comes from John Stone, who says there seems to be a massive disparity between the current share price and what shareholders see as a fair price, fair value. Could you explain the difference, and when do you anticipate the gap closing?
So, look, I think firstly, as a management team, we try to focus on what we can control. We like to think we had a really successful past 6 months. In June, I think it would have been difficult to explain how we were going to pay the September cash call. So I think having the funding in place, the team, the debt and equity, the strategic holder, being successful around the 5% arbitration, which kind of seems a long way in the rearview mirror, but it was literally the last half. I think it's amazing how much has been done in that period. Look, I'm a shareholder. Ultimately, all the team really is on modest salaries, but have equity upside and exposure. We're pretty focused on delivering share price. We work really hard, and we work really hard to try to do that for all of our benefit. We look at the share price and we scratch our head a little bit. I think there's a broader sectoral shift, and that's in terms of when we map ourselves against gold stock, there's a general trend negative, and these things are cyclical, and I like to think there's actually a little bit of positivity coming into the gold market. I think I'm seeing that a little bit on my roadshow. And then there's a general kind of London market. To be open with you, I think the London market is less positive than the Australian market right now. And again, these things are cyclical. In 2 years' time, that those roles can be reversed. I think that adds to we think the benefit of having the ASX buyers come in. So that's helpful. We think a low share price, you've seen the register become, I'm going to say 20-25% institutional off zero base. So it does tell you that sophisticated investors are kind of echoing back the sentiment there that this looks like value. Our desire is to walk it up. We think about it. I'm on road shows to try to promote the stock, and people should be confident. I'm going to continue to engage with the retail element as well to try to promote the stock with retail, with new brokers, and things like the town hall, so we hear and respect what people are saying. But look, at the end of the day, we can control our actions, and we think we've done a lot of steps that have created value and position us for future value growth.
Can I stop you there, Sheriff? What do you see as the kickers of the share price over the next few months?
Well, let's not talk about the Newmont Newcrest bid, because I think that's kind of well understood, and how that can create, I think, a transformational outcome for us as a group. But I think I've talked about, we didn't know, Newmont was bidding for Newcrest. That's not to say, we hadn't built relationships with other gold parties in the market, and that we think those relationships put us in good stead. But when we think about those things, we were also thinking about other avenues for growth. So I'm really confident that some of the work we've been doing over the last 6 months will give us greater opportunity. Obviously, Plan A, we're very focused around what's happening with Havieron right now, but Plan B was looking at other opportunities in the in the Paterson, and then Plan C is to look kind of broader afield. But we were working through those opportunities we thought we could see in the Paterson. And again, I think we present as a really good counterparty in the Paterson. So we think there's some catalysts for growth around growth in the Paterson more broadly. We think the resource coming out's going to be really positive. We'd like to see the PFS come out, a sustainability report coming out. Again, I think enhances our traction with shareholders, and that ASX listing. I think bringing new demand onto the exchange can only help. As I said earlier, they're not holding shares. They're not going to come onto the London market and sell them. If Australians come on, they are buying. So it shifts the demand supply curve. I can't predict future prices, but more demand should be more demand.
Okay.
So I'm excited about that ASX listing.
Neil Barnes, I suspect is not the happiest of bunnies. He says, on reputation, we now have an experienced team of board members. What is it that they're doing to add value to the company share price, considering that they've been handsomely rewarded with share options since their appointment? But this is probably a good opportunity to say that you don't get your share options until you've actually, got the share price up, but two, they don't actually kick in for 2 or 3 years, if I understand.
So those options are, I'm going to say 50% out of the money they might ballpark. So they've got zero value from that. They need the share price to go up 50% to get value from that. That seems positive for all of us. And so I think that's alignment. They're not here. They've contributed already. That we had an incredibly interesting journey through 2021, 22 with around the option process and ultimately being successful in that. Again, we had a bit of a Fortescue flavour of that. We had Nev Power involved on our side, bringing what I think is a very good reputation and offsetting the Newcrest brand in terms of trying to convince that we were equally as credible to an independent expert. And to be honest, those directors had been in the background I think I've disclosed, I think it was a 13-month period where I was talking to them before. They provided great counsel throughout that intriguing process. And then if we talk about value, I think we should understand that there's no doubt in my mind that board coming in increased our ability to raise equity capital with institutions and would have been hugely influential in bringing in Wiley. Now, being funded is critical. We had started developing an asset without being funded. I'm unaware of another company having done that. Started a series of cash outflows without having the funding in place. Now, we've solved that puzzle, but believe me, that was not for the faint-hearted. So that director group has helped come in and solve that puzzle with us through reputation, through advice, which is what boards do. So what have they got in return? Options that are 50% out of the money and need a meaningful increase that we'd all like to see to really be to get success and value out of that contribution. And even if they are in the money, they don't actually make any money when it first goes in the money. It's actually got to go out well beyond 50% for them to actually extract meaningful value out of Greatland. So these guys have been the best buy we've ever done. I'm almost embarrassed how much value we've got out of them for what we've contributed so far.
Well, it's probably worth stating at this point that if the Newmont bid is successful, and as you say, it opens up all these probabilities and possibilities, but those possibilities wouldn't be possibilities unless you had the strength and depth of team that you have, I wouldn't have thought.
Correct. Like, the Newmonts, the Newcrest, Rio's in the area. The Barrick was, involved. Dealing with the BHP. All of these groups, we now have the ability to deal with and be seen as a high quality counterpart. Even the banks, the ANZ, the HSBCs, INGs, I'm sure took comfort from the quality of the individuals involved. So the counterparties that we're able to engage with and surround ourselves with, again, are transformed because of the caliber of people we have. And again, so I think they've been great value. When our share price when their options are in the money, and they've made, and that's what we expect and hope will happen. They will get some kind of benefit from that. But right now, it's been it's been largely a one-way street. They have great optionality around those the value there, but right now they've been, we've been drawing from the well. We've been using them to shore up the foundations of our organisation, which I think the last 6 months was exceptional. To resolve that 5%, which was a terrible cross to bear, to resolve it successfully, to keep 30%, to bring in debt, to bring in equity, to bring in a strategic, this is as much, credit where credit's due. This is the site team, but to then get the decline from behind schedule to above schedule, it was a good 6 months, guys. It was a really good 6 months. Now, I can't control the share price, but I think we've given it an opportunity to flourish in the future.
Okay, now final question. We've got one in from Stuart Wolstenholme, one of the live questions. Do you think the Australian government will allow the takeover? If it's agreed between the two counterparties, do you think it will allow that transaction to take place, given that 50% of Australian leaves 50% of Australian mining assets in foreign hands?
I think 50% of the Australian gold poor would be in foreign hands, as you described it, if this takeover was successful. Look, in a word, yes. I think USA is seen as a very similar jurisdiction to Australia, as is the UK, as is Canada, and most of Western Europe. It's a market economy system, with similar levels of governance. So I don't think Australia would see it as a threat to national security, with like-minded individuals owning assets in the country. And Newmont already owns and operates two very successful gold mines in Australia. So I think there is one. I had a periphery involvement was with the bankers at Shell looked to take over Woodside many years ago. That was Australia's only primary kind of oil producer at the time. I think that was seen as oil was a little bit more fundamental to the economy. This is probably going back some decades now. But I think gold probably isn't seen in the same way. It's a very fragmented sector in Australia. There's lots of golds. There's lots of homegrown gold companies. Northern Star, I'm going to put a plug in for there. So I think it's a little bit of a shame to see what's been a mainstay of the Australian gold sector if it does pass into Newmont. But equally, I think Newmont's been an incredibly respected and responsible and good part of the Australian gold sector for many decades. And indeed, Newcrest, the reason it's called Newcrest, which is similar to Newmont, is because it was a spin out of Newmont at once upon a time. So they're kind of buying back the farm. which is an interesting turn of phrase, and because that's something we might be interested in doing one day.
And on that note, I'd like to say, Shaun Day, thank you so much for joining us. Thank you to the hundreds of people who've just joined us live to listen to what was an exceptional Q&A from Shaun. Thank you so much for being so open and telling us what's on your mind. And that's it from London Southeast for today. Thank you so much for joining us. Thank you.